Is that working? Can you hear me? No? Yes? Yeah, it does work? Okay, good. Hi everyone. Well, I'm going to ask you to give another round of applause for yourself because you made it through 3 days of a conference and you stayed here until the last panel, which is the most fantastic panel of the 3 days, I would say. So please make it a clap. You all did a good job. Thank you so much. Davinci, please.
Thank you.
It's Davinci time, finally. All right. It's actually a bit. I'm Olga Yarshevsky. I'm a journalist. I'm a content strategist, and I am a conference producer for AIBC and Sigma conferences worldwide. We actually do 6 events a year. That's a lot in every country of the world. So, and it's my absolute pleasure to be here today with these guys because I've known them all for many years, and I have to say, there are like many millions of followers represented now on stage. And everything you wanted to know about crypto market and blockchain is actually right here. So I would like you to introduce yourselves, actually, because no one talks about yourselves better than yourself, right? I'm going to start with Davinci right here.
Well, my name is Davinci Jeremie. Actually, my full legal name is Leonardo Davinci Stephen Jeremie, believe it or not. Yes, my parents were drunk when they named me. Anyways, yes, I'm known as the guy who told you to buy Bitcoin for $1. I started talking about Bitcoin in March of 2011 when I realized what it was, and I've been an influencer and a software developer since I was like a little kid, really. And yes, I knew right away once I saw Bitcoin that it was going to change the world forever, and that's why I decided to talk about it on my YouTube channel.
Thank you. Bitcoin maximalist we have here.
Not really.
A true one, no? Thank you so much. Andres,
Can you hear me? Yeah. So my name is Andres Meneses. I'm from Colombia. I've been in the space for 8 years. When I moved to the UK, obviously I didn't have any money. I was cleaning toilets, making coffees. And long story short, I became a computer engineer. And when I was watching some videos about computer coding, I watched this video about Bitcoin. So it got my attention, and I just bought my first Bitcoin at $350 through Coinbase. And then, long story short, in 2017 and 18, I built a community of 40,000 people across the globe. So I bring a lot of people into the biggest exchange of the world right now. Then I left crypto in 2019. I got burned out, and then it was NFT and community building and social media that brought me back. So I have a podcast called Crypto G's. So I interview people, not about the experience of technology or white papers or tokenomics. We talk about personal life, the struggles, the highs and the lows, so more personal connection.
Thank you. Personal stories are the most important in every industry, especially now in the industry. Thank you. Kyle Chassé.
Thanks.
Please.
Yeah, my name is Kyle. I've been in crypto since 2012. I've always been I'm, believe it or not, I'm one of the people who really love the idea of decentralization and disruption. So I've always wanted to make a big difference in the world. And before crypto, I was in regenerative medicine, longevity, stem cells. I'd like to live forever and at least see decentralization flourish around the world. But I sold my anti-aging company in 2013, bought Bitcoin, and started building the world's first Bitcoin lottery. And since then, I've been building and investing. I've invested in all the big exchanges, Coinbase and Kraken and Ripple and things like that. And now I run a venture studio called Master Ventures. We have a fund, an LP fund, and also have projects ranging from decentralized VCs, quant-based AI, algorithmic trading platforms. We've got launchpads and a bunch of stuff. So we're a venture builder, basically, and gives us a very wide range and scope of what's happening in the space. And I also have a YouTube channel and Twitter as well, like everyone else on stage, but they're much bigger than I am as far as the audience.
You're the biggest one, bro.
You're the biggest one, true. Thank you. Now to my left, Carl, please.
Yeah, my name is Carl Runefelt. I have been in crypto since 2017, been making videos and...
That's when I met you.
Yes. Yeah, a long time ago. Me and Chris were actually traveling around the world and going to conferences. And yeah, starting my YouTube channel back then as well, and my Twitter grew a big following, and I've been investing in hundreds of crypto companies. And yeah, to this day, I'm just very, very passionate about crypto. I keep investing, and I keep making videos, and I have my team, and I just love crypto. So I build and I invest in crypto as much as I can, and yeah, that's what I do.
Thank you, Chris.
Yeah, I'm Chris. As maybe some of you know, I have a YouTube channel. I have a Twitter channel. The YouTube channel is mostly about Bitcoin. It regularly gets, as far as my research goes, the most views for Bitcoin-only videos on YouTube now in the bear market. And then I have a Twitter channel where I'm posting also mostly about Bitcoin. It all started 2017 when I was still taxi driving, but I invested in crypto and ICOs, and these investments went very, very well. And I thought, hey, you might as well document that on YouTube. So fast forward, 6 years later, I'm here and still pushing content, investing. Of course, I'm building some projects in stealth mode, and I'm having my own project also where I'm launching other projects. And then in my free time, I'm just doing a lot of ice bath, sauna, and building some schools, if you know. And that's basically it, the shortest intro I have ever done, probably. But they told me keep it short, right?
And sweet.
Yes, that was sweet, I hope.
Absolutely. Thank you. Last but not least, Mende.
My name is Matthias. I've been in crypto since 2016. My journey started with OTC, and after that I got inspired to read the Satoshi white paper, and then I actually fell in love with the blockchain technology. So the cycle took me into a little bit of mining, development firm, and I co-founded the Dubai Blockchain Center in 2018, which helps educate government sector in UAE and to explain them how crypto works, what's Bitcoin, how to track things on the blockchain and so on. And now today, since 21, I'm building my own social engagement platform called Bonuz, which is a platform to help to create brands and creators and their fans and community members to amplify the experience. And yeah, I also have a YouTube channel, not very big like the guys, but I guess I'm a different type of KOL. Thank you.
Thank you so much. Definitely in Dubai. So, all right. So I'm going to start with I'm going to ask questions, and whoever wants to jump in, please do. So we all know that crypto is extremely volatile market. I don't have to explain this, but it definitely has its own rules of development, its own laws, right? So I want to take a little step back and do a little overview and see what took us here, what took us to that particular cycle. Why are we here? Which events influenced that? Which people and which projects influenced the current state of the market that we find ourselves in?
Okay, so
back in the memory lane.
Clarify that question a little bit. Like, why are we here? Like, based on the price of the market, or because we're in the bear market, or you're saying because
bear market?
Yes, basically, Bitcoin was the first cryptocurrency out there. It was already programmed in with a 4-year cycle of deflation, where the amount of currency that was actually adding to the current supply was being reduced by 50% every 4 years. This creates the 4-year cycle of where we have a boom and a bust, and we're in the middle of this bust cycle, which we're returning to the boom. Now, in this particular period, of course, it's a little bit more volatile, very choppy. It's not like straight up to the moon, like we see at just shortly after the halving, meaning when Bitcoin cuts the supply that's actually coming into the market by 50%. And so when we see the halving, we see every single project, every single cryptocurrency out there start to pump along with Bitcoin. And then once that euphoria wears off, we see a very big bear market that occurs the following after about a year and a half after the halving. So that's the cycle of Bitcoin. Normal market cycles is anywhere from 7 to 8 years. So this has been a very shortened cycle. So people can become very rich within the 4-year cycle. That's why when in Bitcoin terms, when people say, hey, why I'm not a billionaire? I bought Bitcoin today, why I'm not a billionaire the next day? It's because of that 4-year cycle. It just seems that, oh, wow, people are becoming rich really fast. But it's every 4 years.
Well, apart from the cycle thing, who wants to reminisce about the events that took us to the bear market cycle this time?
Wait.
I want to say that it's not specific events which take us to the bear market or which take us into a bull market. There's this famous saying, in my opinion, show me the charts, I'll tell you the news. And I think eventually Bitcoin has to enter a bear market just because of market psychology. Everyone is profitable, even like the last laggards coming the latest and buying Bitcoin at 65,000, they are profitable at 69. There's one point of time where the market has to turn around. It's very difficult to predict when this is happening, but it has to happen. So these news which are coming then, here, this exchange going down and FTX and Celsius and all of that, it's all a matter of effect. It's like the news which has to happen to bring the market down. So we have usually a first sell-off of big people, of whales or something, bringing the market down, and that triggers then in the beginning of a bear market a chain reaction of more people selling, and then suddenly platforms like Celsius or FTX, they are holding their assets in crypto, and then their balance sheets is like the crypto balance is actually going below their liabilities or whatever, and then you have more and more companies going bankrupt, and that triggers more chain reactions, bringing the market down. It's every time the same thing. So I don't think that it's necessarily these specific news events triggering the bear market. It was just time for them to fail. And now I think it's time for the bull market to start. So suddenly we will see many good news coming. So BlackRock and all of these things, it's not a coincidence. It's happening just where it has to happen. And I'm not saying the ETF is coming now. I don't think it is coming, but the news at least has to be planted. And I think this is my view on the market. The bear market had to happen because everyone was profitable. Now everyone lost their money. Everyone hates crypto. So it was time for the bull market.
I actually don't think that we're in a bear market anymore. I think that typically when you see someone draw out a market cycle, they'll look at, okay, what was the lowest point in the bear market, or at least kind of what do we think was the bottom, and then they'll look at that, and then they'll go all the way to the top and say, okay, this is your kind of 2-year bull or bear cycle. And I'm pretty sure that when we look back in 4 years from now, people will mark the 15,000 or whatever mark that we hit from Bitcoin, and they'll look. Today we're at 30, we had 31 an hour ago. I think that we're in a clear uptrend. It doesn't feel like it though. You know, normally when we talk about market cycles, you know, and you hear about projects launching, they want to have euphoria. But if you look at kind of market cycle sentiment, euphoria is already well into a bull market. That's when things get really good. And like, you know, Davinci was saying, this is when people start to get really rich. But when you think about market cycles and lengths, when it starts feeling really good, you should be very, very cautious, because this is when you start to see kind of this parabolic run up toward the kind of prime of a bull market. And we've already long been, I mean, when was this is like post FTX that we hit 15K, right? Which is almost a year ago. And if we have, so I think that we only have 12 to maybe 14, 16 months left before we come down again. But this is going to be a wild ride between now and then. Moral of the story is, in my opinion, if you're sitting on sidelines or something like that, you've got some dry powder, and if you're waiting for a big correction, I think that in 4 years from now or 6 years from now, when Bitcoin is at $250,000, $500,000, you're not going to care if you bought it at $30,000 or $25,000, $20,000. It's like Davinci was buying on at $1. He didn't care if it was 50 cents, 75 cents, or $2. You just buy in. And when I was buying in at $100, $150, I didn't care. Looking now today at $30,000, I don't care if I bought in. You know, my range was everywhere from $75 all the way to $500 when I bought majority of my Bitcoin. And looking back today, it would seem silly if it was at $250 to wait for it to come back down to $150. You just don't care, right? So I think At this point, a lot of people have been asking me, like, oh, do you think the bottom is in? Are we going back down? Who cares? Like, just take whatever you can afford to not have to mess with and rely on for paying rent or paying for whatever, and just dollar cost average into the market. And I think we're in a bull run right now. It just doesn't feel like it yet.
I bought the $32 top back in 2011. So, and people were laughing at me, saying, "Oh, you fool."
And now here we are, right? All right, let's let's leave Bitcoin a little bit aside.
Please.
So yes, please. We've seen up and down cycles of interest to different types of digital assets over the last years. I mean, there's been a CBDC boom. Everyone wanted a CBDC. There's been a stablecoin boom. Everyone wanted their own stablecoin. And then we had a shift of perception of NFTs over the last couple of years. So what do you think about digital assets in general? What's going to be trending soon? CBDCs are coming back. Stable coins going down.
CBDCs.
I don't think anyone cares about CBDCs like this.
No, I mean,
yes, I don't even know how to pronounce it. But I still want to
central
answer
bank
your...
digital currencies.
I know. But I think it's not really crypto. It's not decentralized. It's not permissionless. So
Tokenized assets?
yeah, so I wanted to answer your question with one thing I wanted to mention. I think what could be, but it's a very high-risk play, could be a thing in the near future, could be ordinals. I know it's congesting the Bitcoin network and everything, but I think the narrative really could work, but it's a very high-risk thing. I bought in and I'm not profitable yet, but I think NFTs and tokens on top of Bitcoin is at least a narrative which could be worth a hype. If it's long-term, I don't know, but that's definitely something I think could be a topic in the future, and not really many people are talking about it.
Right. Carl, say something. We've been waiting for you to do though.
I think there's always another narrative around the corner. I mean, a few years ago, it was the DeFi summer. I remember how I was FOMOing into that, and then there was something else, and then a few months ago, AI started. We've had crypto gaming, ordinals, NFTs. There's always something new around the corner that everyone will start talking about, and the most amount of money is made by buying when no one is really paying attention. So maybe what Chris is saying now could make sense with ordinals. Maybe that is something that didn't really take off yet. But even if you miss that one, then there's another one around the corner. I don't know what's going to be the next one. Like, it's always hard to know. I remember when people talked about NFTs a very long time ago, I was a little bit skeptical. I was like, nah. That was like 3 years ago, maybe, like very long time ago. But then it really completely took over, and even the biggest celebrities of the world, Justin Bieber, like everyone started launching NFTs, and it's really crazy how these narratives can just take form very quickly. Yeah, what's going to be the next thing? I actually don't know, but there is going to be something for sure. I think AI is a big thing that haven't really taken off completely yet in crypto.
I like how 3 years ago it's like, oh, it's a long, long time ago.
Ages ago, in a galaxy far away.
Exactly.
Yeah, 3 years in crypto is like a decades, you know? It feels like an eternity ago.
Is there any project, not necessarily in like digital assets, I don't know, blockchain gaming or AI solutions or metaverse or any Web3 solutions that has been of interest for you lately? Something that you looked at and said like, whoa, that's something?
I mean, I think the crypto gaming sector as a whole is a huge sector that's going to take form in the next few years. I don't expect a huge hype in the next 2 months maybe, but I think because gaming itself is a massive industry already. It's 9 times bigger than music, 3 times bigger than the movie industry. And you can see Saudi and other big countries, they're investing billions and billions into gaming. And then when you have crypto, which is also a very explosive industry, and you combine them two, then I think you have something that could be exponentially growing in the next few years. And I think people underestimate crypto gaming. Maybe they overestimate the short term, but they surely underestimate the long term of crypto gaming. So I've made investments in quite a few crypto games. Obviously, Medieval Empires is my biggest investment. but I've invested in dozens, and I really think that some of them are going to go on and breach into the mainstream and bridge the Web 2, Web 3 in gaming. And I think the big gaming studios are going to come in as well. And there you have a hype that maybe, like I said, it's not going to be like next month or 2 months from now, but in the next 3 years, I think it's going to be absolutely huge.
I'll give some examples of kind of future trends. I mean, I've always kind of, my entire career, whether it was in regenerative medicine or crypto, has always been trying to predict what's happening next. And my timing as a builder and entrepreneur has often been too early. And I'm trying to work on timing to make sure that I don't build the next Amazon, but it's 5 years too early or something. But I think that as somebody who's really focused on kind of what's evolving by really being plugged into the market and the kind of builder space, you know, this is going to be a kind of a shameless plug for what we're doing at Master Ventures, but this is what we focus on. You know, we were one of the first launchpads in the space. We've been working with AI and blockchain as something harmonious for. We started a company called Fluid AI. Started in 2018, so it's not like we jumped on the AI bandwagon when ChatGPT came out, but we've been using our own deep learning, machine learning models to do quant-based modeling and predictive modeling, and building that into to really fix the kind of fragmented liquidity space within exchanges. You know, it's really a problem for institutions right now. And actually, most people on stage, you can't make a trade for $100,000 without affecting, you know, major slippage in the market. So we're fixing this liquidity aggregation problem. But I think DAOs are really interesting. You know, this is going to be a way that it's kind of like democratizing opportunities within collectives or communities, where Uber really democratized kind of the taxi space and gave anyone with a car the ability to clock in, clock out when they want to earn some money. And a DAO is a really nice idea too, because anyone in a DAO can typically earn money by doing work. And so I think that hasn't evolved yet because people haven't figured out maybe the right incentive mechanisms to incentivize people to actually do voting, to do work, to do promoting, whatever they can offer for people to participate. And then also, when you think about blockchain, what is its purpose? The purpose is to democratize opportunities for people. You know, back in the day, before things got super popular like they are today, there was always this kind of motto. And if you look back in the early days, everyone always talks about banking the unbanked, or giving opportunity to people that aren't the 1% of the world. This is what the tenets of Bitcoin were built on. And that kind of isn't talked about too much anymore, but really...
No, it is.
Huh?
Financial inclusion, absolutely, it is.
Yeah, people say it on their pitch decks to try to raise money, and then they do some centralized bullshit company that...
Man, come to Philippines with me in 2 weeks, eh?
Huh?
Come to Philippines with me in 2
Yeah, Philippines, okay, great. But I mean, probably... Okay, anyway. But this is important, right? I mean, we need to be focused on ways... if you can bank Philippines or Africa, it's a massive opportunity, right? There's 2 billion people on the planet right now who don't have financial histories, bank accounts, and we're looking for ways to actually be able to assess creditworthiness of individuals who don't have bank accounts. And believe it or not, with a lot of technology that's being built today, we can, when people are participating in these ecosystems, can assess creditworthiness based on a bunch of different things and start to actually bank the unbanked, or democratize access to early stage investing. Most of us on the stage we all have our own independent jobs, companies, but we also invest in early stage. We are privileged. You know, all of us here get a lot of opportunities from amazing projects who want us to invest in their seed rounds, and we're getting in at, 5, 10x lower than the public is. That's a privilege. You know, most people don't have that opportunity. And so something that we're building is a way to democratize access, so anyone with $20 can come in and get access to early stage opportunities for the best crypto projects in the space. And these are some of the trends that we've identified that we're focusing on. The last one that I think is really, really important is self-regulation. One of the things that no one is even thinking about right now, because everyone's looking at regulators help. How do we become more mature as a space? How do we stop rug pulls and scams? And how do we pull our stigma out from a space full of bad actors to a mature space that can actually develop and earn a positive reputation? And everyone who's here today, pat yourself on the back, because it's not easy to go through this market of something really difficult, and usually people come in the good times. But if we really want adoption, if we really want altcoins and things like that to take off and dApps, we need to self-regulate and stop all the scams and things like that. And national regulators cannot regulate a global space. Never in history before have we ever had businesses that launch on an international scale. Regulation will only help institutions and enterprises get into the space on a massive level. That's great for price appreciation because price appreciation attracts more people. But if you want to stop bad actors, you have to self-regulate. And every industry in the world self-regulates, right? But we haven't yet. No one's even thought about it. So if any of you guys are out there, builders, entrepreneurs, think about how do you self-regulate. If you want an example, look at proof of reserves. When FTX collapsed, everybody demanded that exchanges show proof of reserves, but there was no best practices or standards in space. So there's all this controversy on crypto Twitter about what is the best practices. Oh, you're not using Merkle trees. Oh, you don't have proof of liabilities. This is bullshit. We need standards, we need best practices, and we need to self-regulate the space. And there's room for multi-billion-dollar market cap crypto projects that come in, look at what are best practices for SEXs, DEXs, DeFi projects, whatever. If you guys can solve that problem, it's massive, massive opportunity. Or if you're looking at things to invest, look for things like that as well.
That was a good investor perspective. Thank you. Does anyone want to add to future trends, Davinci?
Well, I want to comment on the regulation side of self-regulation. Whilst how do you regulate people from doing stupid things? You really can't, because a lot of people fall for the scam of like, hey, Davinci, every single day I get a message saying, hey, Davinci, is this you? Is this your profile? You were asking for money. I'm like, no, it's not me. Like, you don't need a friggin' high IQ to know it's not me. And it's like, I'm sure, have you guys had that before? People.
I think everyone has.
Exactly. So how do we stop? How do you regulate that? You can't. There's no way. You can't regulate people to have brains, basically. It's just not going to happen. So the best way to do that is like people have to learn by losing their money. And then once they lose their money, they know not to do that again. And that's the only way.
Now you stole my question. You stole my question, and you stole my question. I wanted to talk about regulation, and then I wanted to talk about education and I don't know, do your own research and influencer thing. Okay, regulation first. All right. So where are we going with the crypto regulation these days? Look at the SEC. Look at the MiCA. Look at everybody, and ETFs are also popping here and there in the news in Asia. And it's going somewhere. Where do you think it's going?
I think it's going from US over to Middle East. It's quite obvious because the US is regulating against crypto, while the Middle East is regulating for crypto. And I have so many examples of that. And I think everyone sees what they're doing against crypto in the US, so no need to go into that. But in the Middle East, I know many companies that are getting licenses, they're getting a lot of support, and the regulators are sitting down literally with the CEOs of big companies and asking them, how do you want to get regulated? How can we regulate for you? How can we make an environment for you? And there's very few countries doing that. So I think regulation is not a bad thing. It's something that it's going to be like locally just very different. In certain countries, it's going to be absolutely horrible, like probably the US and certain other countries where you don't want to do crypto business. But there might be other countries where regulation might actually support you. You might even, get financial support. There are countries that might even invest in crypto companies. I know that there's certain Middle Eastern countries that actually look for companies not only in gaming but also crypto, and investing and attracting crypto companies there. So I think that's the most important thing, to find a country that supports crypto instead of regulating against it.
Yeah, that's Dubai in particular. And I think you can actually follow up on that from a person perspective who sits down with regulators regularly.
Well, that's one thing, but another thing is 2 weeks ago my startup Bonuz got the pre-approval from the regulator called VARA in Dubai, and that's a huge thing because there are just like 10 companies. Thank you. That's just like 10 companies who got it, and they're really looking now case by case on the companies what exactly they're doing. So I believe that DeFi projects will actually have a much harder time than projects like who do certain type of utilities or work with NFTs, like token gating, proof of attendance, maybe artworks, maybe soon the real world assets and tokens, probably on the BRC blockchain because it's a very good one. And it's happening, and case by case also, as Carl says, the regulators, they sit with the people down and they talk, ask heavy questions, and then it's on the people to give the correct answers. And then perhaps a wonder happens.
Well, congrats on the license. I thought you had it.
No,
actually.
just pre-approval, but that's already huge, like something
is.
unthinkable. Exchanges
True.
spending millions on lobby and they sometimes don't get it.
True. Okay, regulation to my right side.
I just want to, maybe I wasn't clear in the way that my explanation had just come back with what Davinci was saying. Like, I'm not saying that, I'm not proposing self-regulation fixes everything. You can't fix dumb things, and you have to sometimes learn the hard way. You know, a P2P scam is different than a project going to market that is following what's been understood by the industry wide and adopted as best practices and standards. This is the same thing in business when you are manufacturing pharmaceuticals or foods and you follow ISO standards, right? ISO is one of the largest self-regulatory standards organizations in the entire world. Or you look at problems like the video game industry when the regulators wanted to crack down hard because you had things like Grand Theft Auto, which were very violent and had sex and prostitution and killing and murdering. And you had young kids playing these games, and they were like, this is not appropriate for this. So they came and self-regulated and started creating like NC-17 and different, same thing with the cinemas and movies with R ratings and PG-13 and things like that. There are ways that we can self-regulate that we as an industry adopt as best practices and standards, and there will be essentially a DAO or regulatory committee who agree that these are best practices, and anyone who's using or doing something, bringing a decentralized project to market or a centralized exchange, is minimally following these things. Maybe it's DeFi and you're following these best practices to make sure that you don't have your smart contract exploited with the billions of dollars at stake, making sure that it's going through several audits and bug bounty programs. And if it doesn't match these minimum viable kinds of things that check all the boxes through this agreed standard, then they're not following best practices. And therefore, you should be cautious when choosing to use a platform like this, rather than someone who has been following best practices and is willing to go through that audit or through that process, and then wears a badge proudly and says, I am following best practices, and then you as a consumer, or as someone who's about to use this product, can feel more comfortable using it, knowing that at least they're doing the minimum viable types of things necessary to make sure they're protecting their customers, or investors, or whatever.
Well, where I sit on regulation is there's probably a lot of you guys out here that they're starting up a business or in the crypto space. I would try to avoid regulation. Don't even bother even setting up a business license when you're setting up your crypto. It's a waste of time until you actually make some money. When you make money, that's when you start to do all the rest of the stuff. You look into regulation, look into open up a business. But don't start making sure you get the cash in first, and then start looking at the regulation. Don't ask for permission to build something, right? Go ahead and build, because the people who you're asking permission doesn't know jack shit all about what you're building. So why ask them? Can I build this, please? Please? It's just ridiculous.
Yeah, especially if you're doing something disruptive, for sure.
Andres, you're very quiet today.
I don't like to talk about regulations, but I want to say something. Get a good lawyer.
Okay.
If
Yeah.
you have enough money right now, get a good lawyer and move to Dubai. That's the best advice I can give you. It's
Bravo.
simple.
Yes, that's a good advice, I have to say. I mean,
and try to avoid
that's an
the
obvious
US
choice. That's an obvious
at all
choice,
costs.
true. Okay, so the next question is about, I think, well, self-regulation, self-education, right? You guys are all influencers here, and you have a huge following. And I don't know, as a media manager, I know that it doesn't take a big number to do. And to be an influencer, it takes to build trust and a certain channel of communication with your community and to connect with them. Now, we've been seeing so many scammers out there who are using crypto influencers to, to scam people, to con people, and it works vice versa. We've seen influencers just instantly posting some, shit coins out there, and everybody's buying it, and then so many people are deceived. So it's like it happens all the time. So what do we do to avoid this? Apart from, of course, doing your own research. If it's not that easy to do that research or to dive deeper into the market for a new person, for example, what does it take to build a trusted platform for an influencer and to make the community trust you?
I mean, there are two different ways to look at it. First of all, what we can do as an influencer to be trustworthy and to deserve the trust of the people. And then on the other hand, what the people can do not to fall for people who are not doing that. So first of all, from our own point of view, I do agree that it's extremely important to be trustworthy and to be deserving of trust. For this, you have to say no sometimes to money, right? Like as an influencer, you get approached all the time by projects. So what I did, especially throughout the bear market now, but also before, I almost only talk about Bitcoin. And my promotions usually are built around exchanges which already have a good reputation, which are already strong, which have shown in the past that they don't have downtime and this and that. So, of course, I promote Bybit as a platform where I'm trading on myself, but Bybit was awesome so far. When someone lost money, there was a week, they refunded people. So when I saw this, I thought, okay, that's a good thing. And I get approached by literally every single exchange there is. And they want to give me money for monthly retainers, for promotion and this and that. Sometimes I just have to say no, even though I'm 90% sure it could be fine, but what about the 10%? That's why so far I was lucky that I was not involved in Celsius, not involved in FTX and so on. And maybe there was some degree of luck, but I was able to, because of my strictness, how I built my content, I was able to a high degree of certainty ensure that I will be lucky and not fall for that. And that's why my reputation didn't get hurt by any of these projects, and I'm very happy about that, and I really hope that it will not happen in the future, but so far it looks good. So this is about the promotion, and then of course, what content are you choosing? If you talk about Bitcoin, if you talk about Ethereum, you are pretty much on the safe side. There's no CEO of Bitcoin, they didn't raise funds, right? It was just like grassroots, mining, great thing. So now when I want to talk about altcoins in the future, and maybe I will, because I hold some altcoins and people are interested about my portfolio, I will be very careful how I communicate that. I tell them, hey, every single cent invested in whatever, Aptos or this and that, you can lose everything. And it's true. It's much more likely than like investing in Bitcoin. Losing everything is, in my opinion, extremely unlikely. It's possible, but very, very unlikely. So it's the way how you communicate things, because even though you say, I'm not a financial advisor and yada, yada, in the end of the day, no matter how much you tell them, some people just blindly follow, buy, they lose money and they blame you. So that's where I want to talk about what people can do actually to not fall for that. Number one is, of course, taking responsibility and just investing based upon your own risk, or upon your own research, and not just buying what an influencer tells you. But more importantly is always to consider different sources of information. That's not only influencers, that's not only one influencer, not many, but you should actually check some newspapers, check this, check that, and like get a variety of information, because no one is always right. And I think it's pretty important to question everything. Even if your favorite influencer is recommending something, you should always consider him being wrong, him being biased, him being bought or something. Because just as you said, this space is pretty crazy, and yeah, you should never forget about that.
I think I see the signs, but since it's the last panel of the day, can we have 5 minutes more?
You can have 2 minutes more.
Okay.
5.
All right.
The boss is in here waiting, so we got to get it up.
Oh, okay. Okay. Guys, real quick then.
I think so everything changed since FTX. people were buying everything. People were believing everybody. And I think so it used to be more flashy before. Like people were following other content creators that were showing off. And I think so, including myself, I changed the whole narrative about my content. It's about more personal approach, about relationships. So even though the exchange also noticed this, like last year they were, well, 2 years ago, they were just looking for influencers. They had good quality of life. Now they're looking for influencers. They have good content. They are building well, and also they have a personal connection with the community. So I think so everybody started to notice that. And for example, all the gentlemen that are here, also they build the communities based in that, and they have respect because of that. But a new influencer, if they're going to show off, is not going to convert anymore. So people is actually more attached to family, for example, or to emotions, or to struggles. So I think so the big exchange noticed this, and the layer one as well, and that's the kind of content they're looking for, people that are willing to educate in the long term.
I think what Chris was saying is actually really important, but we have to take that a step beyond just influencers. I mean, FTX, Sam Bankman was the darling of industry. Everyone thought he was so amazing and was leading our industry through Washington and all this bullshit. You know, blockchain was made in order to trust code, and you don't have to trust anybody, right? It's don't trust, verify. That's the motto of our industry. Just be careful and ask questions on everybody. It's just because someone's on TV or seems like they're doing something amazing, you never know what they're doing. And this is why we created blockchain, was so we don't have to trust centralized intermediaries who are always prone to some type of manipulation or scandal. And most of the time in our industry, when we rely on somebody, some centralized entity with our custody, with trust, they end up violating that trust. And this is the reason why Bitcoin and blockchain were invented. And so if you have the opportunity, if you have an option to trust code or trust a person, always trust code because you can verify it.
But what about if somebody doesn't know code?
Breach. Are we like out of time? Out of time? Okay. Yeah, I'm sorry, guys. So we could go on for another 45 minutes. I really wish we could open the floor to questions. No, not this time.
Another time, or at the afterglow party. How about that?
Okay. Yes. Personal.
What's that?
Personal. Okay.
Yeah. No, I have a train to catch, so we're going to wrap it up. But I would like to thank our panel up here. Please give them a round of applause.
Thank you.